Okay, I think we're ready to get started. So before we dive in and I introduce our guests, I just want to go over some housekeeping, some house rules that I've been going over already for some of you all. As I said, this is a closed group panel discussion for the members of the DPDP Compliance Forum. These members are privacy leaders in large enterprises who are at the helm of DPDP transformations in their respective organization. This panel discussion is for a closed group, but it will be made available publicly once the panel discussion is over. The idea here is that this allows for closed and focused discussions in a small group, learned group, but the broader privacy community can also learn from this. In that sense, this is the first public event of the DPDP Compliance Forum. To the attendees, this is not a one-way street. We have the guests here, who I will introduce in just a moment, the panelists. But this whole community is about a free exchange of ideas. You all will find that you're able to unmute yourselves and participate in this discussion. So please feel free to do that. We will trust your discussion to come in at the right time. And of course, please try to keep your contributions concise, but we're really looking forward and leaning on your contributions to this discussion. And since, this is a group of leaders who are working in these large organizations, I'm just going to go ahead and make this disclaimer on behalf of everybody that all views that are expressed in this session are personal and they do not reflect the views of the organization. The whole point of this is to freely discuss ideas. And so given that this is going to be publicly available, this is something that is critical to keep in mind. We're here to share best practices and insights. And of course, full disclosure, we are consenting by legality. It is known that we are building in this space and we have a tool, but that is not the point of this event. Through the course of this event, you will not hear a sales pitch, you will not see a demo. Rather, this is focused on sharing insights and best practices within the community. So this event is focused entirely on the community, and you will not. It's not a demo or a sales pitch or anything of that sort. We'll do that in our webinars. So before I, dive into the topics, really want to first I want to introduce panelists. So I'm Pushkal. I'm the head of Consent Infrastructure and Legality. We have Dipanjan. Thank you so much, Dipanjan, for joining in. He's the DPO at HDB Financial Services. He has 14 years of experience in the IT industry with a focus on data privacy. He's previously worked with L&T, Wipro, Infosys. He's also experienced in managing global data privacy compliance across multiple jurisdictions, such as GDPR and CCPA. So thank you, Dipanjan, for coming in and sharing your expertise with us.
Thanks for the opportunity, Pushkal.
Thank you. We also have Sneha. Sneha is currently a director in the privacy practice at PwC. She comes with over 15 years of experience across financial services as well as non-financial services, supporting organizations in complying with cybersecurity and privacy frameworks, industry certifications, as well as regional regulatory compliances such as GDPR, ISO, PCI DSS, etc. So we thank you, Sneha, for coming in for this as well.
Thank you for the opportunity.
Awesome. Yeah. Okay. So with that, just a note on the agenda for this discussion. So here today we are talking specifically about retail lending, and within retail lending, we're talking about designing consent journeys. Right. So through the course of this session, we will explore the various challenges that go into simply collecting consent, allowing for consent updates and consent management within the retail lending space. In order to do that, we will first try and create a picture for all of us as to what the retail lending space looks like. What is the problem that we are trying to solve? What are the different channels from which customers are onboarded? What are the various products available in these journeys? What are some scenarios that are specific to retail lending? And we will also focus on designing good user experiences around consent collections that are practical as well as compliant. So these are the broad topics that we will explore, that we are looking to explore, but also the agenda is deliberately a bit loose. As I said earlier, We will rely on the inputs from our panelists as well as our audience to drive this discussion. So please feel free to come in with your questions. If you want, you can post your questions in chat, or you can simply unmute and ask your question at the right time. So to set the tone for the session, I just want to start out with an open-ended question for Dipanjan. Dipanjan, what do you think are the most significant challenges that retail lenders will face in collecting customer consent
Okay.
across these channels?
Yeah. First of all, the word consent, I mean, that is misjudged at present. I mean, how organizations are collecting consent. If you ask any organization, how are you collecting consent? They will say, we have consent. But would they able to be demonstrate that consent? I mean, that's a big question. So as per the DPDP Act, so collection of consent and demonstrating that consent, these are two things which must be adhered. Now, when we call consent, now most of the consent are basically a checkbox. Sometimes it is pre-checked in, which is not allowed under DPDP, where you club a lot of things. I accept the terms and conditions. I accept to be contacted. I give my consent to receive offers, future offers, cross-sell offers. So this is what we call, or a lot of organizations call consent as of today. But that landscape is going to change with post DPDP, because the law requires the consent to be very granular. I mean, you cannot club different aspects together. You have to have those choices given to customers. So consent is more about choices. So for certain aspects, for example, in a finance industry, you require certain data processing to be done to analyze the risk of the customer, to approve a loan product. So these are basic requirements for which you need to do the KYC as well, for which you require the data, without which we cannot perform the particular task, or you cannot provide service the customer. But there are certain non-essential services as well. For example, marketing and communications, cross-sell. Apart from that, you also have business analytics, so which may not fall within the scope of loan servicing. So these are optional services, and customers should always have a choice to accept or reject those options and move forward with the loan service. So that option must be given to those customers. Now, at present, most of the companies are struggling in that area, and DPDP clearly says that you have to give these choice to the customers, otherwise you are in violation. So this is the first challenge area, to determine what is necessary and what can be given as optional to customers. While most of the organizations think that once they acquire the data of the customer, they can use it for any purpose. That's not the case. So the law is very clear about purpose limitation. If you have taken consent for a particular purpose, until there's a legal requirement for it, you should only use data for that purpose only. Additional purposes, use of for additional purposes require additional consent. So that is also going to change. Apart from that, consent is collected at different levels. So there are multiple touch points through which you can service loans. You come in contact with customers, you collect the data. So integrating consent in every platform, because at every touch point you are collecting some amount of data and you are utilizing that data for a specific purpose. Now, here, when you collect the data, you need to determine for which purpose you are collecting, because you have to inform, as per this law, to the customer that this data will be collected for this purpose only. So, purpose limitation is a challenge area which every organization needs to determine before collecting the data. They need to clearly say why I am collecting it, and for that purpose, they must collect that consent, and they need to ensure that that data is used for that purpose only. When it comes to cross-selling, so it's easy to cross-sell any product to customers today, but going forward, that becomes a challenge, because you need to check whether you have the adequate consent to cross-sell any product to customers or not. Customers might take a loan, but they may not agree to be contacted frequently with whatever means: phone, email, WhatsApp, SMS. Certain communications are always allowed, for example, for loan servicing, for EMI trigger, for reminder of due dates. These are certain things which always be there. But when it comes to, I mean, once you have taken a loan and the company is coming back to you for additional products, maybe an insurance product, maybe additional offer on additional loan products. So in that case, cross-sell becomes a challenge until and unless you have consent, clear consent from the customer. I think these are certain areas. Apart from that, I mean, there are different challenges from which data comes to us. So data might come to us from a third party. Now, when we collect the data from a third party, we don't know whether there is adequate consent obtained by the third party or not. So that again becomes a challenge. We need to ensure that the third party has a proper consent obtaining mechanism, so that that third party is also in compliance with the law. And when we ensure that we are onboarding a vendor, we also need to check the third party due diligences. We also need to check what privacy compliances and what consent management protocol the vendors or the third parties who are collecting customer information and forwarding to us are taking. So these are certain challenge areas I think we need to look on. Yeah.
Fantastic, fantastic. So, Dipanjan, you've perfectly set the stage for the rest of this discussion. I think critically, you've spoken about two main topics here, which is what we're going to explore in this discussion. The first one is about the scope of the consent from the point of view of the business, right? What can the business do with the consents that they're collecting? What are the sort of purposes for which the consent is collected? You brought that also very clearly, where there's the mandatory consents for loan servicing and optional consents for marketing and cross-selling and business analytics purposes. So the scope of the consent is very well tied to the business processes, and that is one part of our discussion about how to navigate that. And then the second part, you've laid out that consent is collected from multiple channels, and these channels can be third parties. Each channel poses its own risk. It can be third parties. You can also have agent channels, right? You can also have physical channels. So all of these channels also pose their own sorts of issues. So with this question, I want to take to Sneha. And with Sneha, what are let's look at third parties, since we're talking about third parties. If you look at third parties, what are the various types of journeys where we don't have to go into the various like DSAs or different types of third parties, but what are the risks associated with each of these type of third parties is something that I want to explore.
Yeah. So obviously risks related to third parties will obviously be there, Pushkal, because what happens is every third party that the organization deals with, they have their own protocols, they have their own workflows, way of working, etc. And they would definitely not be curating or designing that way of working or their workflows for any one individual organization. So essentially what happens is whenever organizations deal with third parties, they have to go ahead with their workflows, in terms of how they are operating, etc. However, something that we have been not just recommending to some of our clients, but we've also seen that it's the most, I can say that something that will work for the organization is ensuring that when we onboard a third party, or when we are dealing with third parties, specifically around consent, we ensure if there is an agreement or an NDA, with that third party, the clauses in the agreement and the NDA are covered to ensure that they are collecting consent, or they are basically complying with DPDP. So just like when GDPR came into picture, right, all of the agreements and contracts had to be updated. We had to see whether the EU model clauses were added, etc., etc. Similarly for DPDP, any third parties that we deal with, we have to ensure that for both parties, for third party as well as the organization, it's covered to ensure that when the third party collects information of the data principal, they have to ensure that they are collecting the consent for the purpose for which they are collecting the data and sharing with us. Now that obviously the organization may or may not be responsible for validating that, but at least through a contract it has to be bound and understood by the third party. Because otherwise, because some third parties also operate as not necessarily they're huge organization, they operate as individuals like brokers or agencies. Some are like one or two people who are freelancers, who are third parties. There are multiple third parties. That whole supply chain ecosystem itself is like huge. It's massive, and there are multiple touch points there. So we have to ensure that we through our contracts protect us as an organization to ensure that the third parties are complying with DPDP.
Got it. So that's a good way of looking at third parties, right? You're looking at third parties as digital slash organized
Yeah.
and unorganized and not digital, which are feet on street who are getting the work done. And it's great to look at it
Because
from
in a
those.
country like India, it is going to be the reality, and it is the reality.
Yeah, exactly. So now, you one way that you mentioned to protect yourself is to have these agreements in place, which either require the third parties to collect consent, or in some way apportion the responsibility for who will collect consent and whose liability is it, and all of that. And that is definitely the first step here. However, I do think that this works in highly trusted and organized third parties, right? Where you trust them to collect the right sort of consent, but if that right consent in all the requirements that Dipanjan has set out for us, if that consent is not collected, then it is you as the lender who becomes liable for that processing, regardless of whoever is collected that consent. So, what are you exploring other avenues? So, a couple of things that I would like to throw out on the floor is that one way to do it is to, even in digital flows, you can redirect to your own sort of landing page where you collect that consent. Or
Yeah.
if you're getting the data from an unorganized third party through unorganized channels, then you can trigger your own consent collection journeys. Do you think something like that is a worthwhile thing to do?
Absolutely, absolutely. And I think even now, some of the organizations, like if you look at, let's take Paisa Bazaar as an example, right? When I go onto Paisa Bazaar, I'm not really accepting any documents or I'm not signing on any documents, even digitally, of Paisa Bazaar. I am signing off whichever organization that I'm buying the product of, that particular entity. So it's happening now as well. I think we just need to sort of realign a lot of these practices to align with the exact requirements of the DPDP. So yes, this is one of the things, and the other is also that if it's very clearly bound by contract, right? Because all of these third parties that typically in the financial services that will be used, they will obviously be verified third parties, by the financial organization. So they definitely, in terms of a agreement or a contract, that binding has to be there. And some organizations where it's possible, where the vendors or the third parties become critical for that entity, through the TPRM or the third party risk management program, right? They ensure that regular governance or the validation of their security practices and things. Obviously, because one is implementation of consent or any privacy framework or control, but the more important part is the governance and the ongoing maintenance. And TPRM in some places plays a very important role in general due diligence, in ongoing due diligence. So, yeah, I think
Yeah,
someone, Satish, I think, had his hand up.
Yeah,
yeah. Satish had a point.
yes, Pushkal Ji, good afternoon and good afternoon all the panelists. Very wonderful
Hi.
discussion going on, and sorry to interrupt you in between. So I had a question. I am CA Dr. Satish Gupta. I came from Berar Finance. We are a middle layer NBFC. So
Oh,
my two questions, however, sounded ridiculous or a kiddish to you. It's very primary and basic. First, can we self-assess ourselves whether we will fall into SDF or not? Significant data, or we have to wait for that guidance or that classification coming from regulator, whatever the board or whenever it will form. Second is that consent management tool. I learned that legality have a consent management tool also. Is this we have to wait because consent manager first it will be get authorized and get impaneled with board, right? 12 months time period is there. So first, what is between difference between that consent management tool and the consent manager itself?
thank you.
And
All right.
the follow up it to it, consent manager will be, I will learn that it is a separate, going to be separate entity, just like an account aggregator. New ecosystem will be going to form. So it will be, we have to impanel some consent manager. If we already have a say the legality consent management tool, then what this consent manager will going to do, if you throw some light on? Should we
Sure.
start exploring and implementing the consent management tool, or we should wait for 12 months. Once the consent manager and all this will be stabilized, then after 12 months we start going for that implementation of that tool.
Got it. Okay, thank you for that question, Satish. I think these I'll just take a stab at it and please correct me, uh, Dipanjan and Sneha. So, can you self-assess for SDF? Right now, the standards for SDF is not out. The Data Protection Board is going to, and the ministry is going to notify who is a significant data fiduciary. And based on that standard, whatever the qualification criteria is notified by the ministry, based on that, they will go ahead and notify who is going to become a significant data fiduciary. So, I don't think it will be a matter of self-assessment. That is something you'll find out. And the question about consent management tool versus consent manager, this is a common confusion in the industry. So, to keep it brief, a consent manager is different from a consent management tool. A consent management tool helps and a business like Berar or any organization that is in a B2C business manage their consents, collect consent, and manage the whole life cycle, retention, deletion, everything. Third, data principal rights management, whatever the coverage is. But at its core, it is a technology service provider, right? It is like any third party service provider. And yes, you should start off right now by using with implementing a consent management tool if that fits your requirements, and if you internally decide that you want to use a tool, then yes, it is a good time to start off with that. You don't need to wait for a consent manager, because a consent manager is a different beast altogether. So a consent manager under the law acts on behalf of the data principal and has no conflict of interest with the data fiduciary. So what that means is that this is not a service provider to the business or to you, it is a service provider to the data principal, right? And they are supposed to be interoperable. They're supposed to connect with different data fiduciaries, and data fiduciaries are supposed to accept consents through those consent managers. How exactly does this work out? We don't have much clarity on that from the ministry, so we are also waiting as legality also, and generally as an industry also, we are waiting with bated breath to get more clarity on that. But what is now a common understanding in the industry is that a consent management tool, which is acting as a technology service provider, is different from a consent manager, which is registered under the DPDP Act to service the data principal and act on behalf of the data principal to manage their consents, manage all of their consents. So I hope that answers your question.
Yes, to
Um,
larger extent, just a small question, if
yeah,
you permit, sir. So, is it required to have just one consent manager, or to have given choice to the data principal to have multiple consent manager? We have to get ourselves registered with something. What will be the exact modus operandi? Data fiduciary will in going to integrate with that data, that consent managers, multiple or just one, anyone, it will
I
suffice.
think I would have to say I don't know about that question. I think the more people I've spoken to, I've gotten divergent opinions on that. So if Sneha or anybody, Dipanjan, if you have any views on that, you can share for the group. But for me, I don't know.
Just a couple of things to add over here. I'll answer the first question in very short. I mean, when you consider, I mean, when you assess yourself, whether you assess yourself as an SDF or not, government, I mean, the Data Protection Board might come out with some notification, but uh, as of now, as of now, under Section 10 of the Act, they have clearly given certain qualifier grounds. For example, the volume and sensitivity of the data that you're processing, the rights, sorry, the risk to the rights of data principals, potential impact on the security and integrity of the nation, risk to electoral democracy. I think these are quite significant grounds on which you can do your assessment. So, if you are processing information relating to children, if you are processing financial data, biometric data, if you are doing, I mean, monitoring social behavior or human behavior, if you are, I mean, monitoring or analyzing psychological behavior of human beings. So these all come under significant data fiduciary. Here, volume may not be a trigger, but the sensitivity might be a trigger. think from a perspective of a social media company. Now, these social media companies have a lot of data with them. Now, this data can be just phone number, email address, name. Till that, it's okay. Now, beyond that, it also starts monitoring your social behavior. It can run an entire program based on behavior. It can throw certain marketing advertisements. They can do an AI analysis of your behavior, your psychological behavior, your state of being, your travel. So a lot of information is being tracked by social media. Now I can give an example. Now there's a dating app in Europe. A lady who, after using this application after for 8 years, sent an email to the DP of this social media, this dating app, asking for, tell me what data you hold about me. And they had sent back an 800-page document stating this is the data we hold. And that includes the entire chat history, even photos which she had already deleted, the contacts she had with a lot of people whom she contacted on that dating site. So this creates a profiling of the customer of this person. So think from that perspective. If you can position yourself in such a situation, so definitely you fall under the, category of a significant data fiduciary. So rather than waiting for government to come up with a notification or data protection board coming up with a notification, look for these triggers. Just don't rely on the volumes. Rather, look for the nature of processing and the risk that might have, or the impact that might have on the data principles. This is one. Second, when you come for a data consent manager, it's more of an account aggregator. My opinion is there will be a central repository, and consent managers will be there who will, I mean, have access to the central repository. So the management of consent will be done by this consent manager, and the entire record will be maintained centrally. And there are a lot of efforts by the government of India through TRI and other platforms to integrate such a consent management framework within India. So that's my 2 cents on these two questions. Thank you.
Thank you so much, Dipanjan. Yeah.
Thank you. Thank you. Sir,
Yes.
Pushkal sir, just a quick question. Is that tool has to be vetted or endorsed or something approved from that consent managers?
No, there's no requirement right now
No
for consent
requirement.
management tools to be vetted. But
Okay.
I just want to gently come back on the third-party consent design that we were talking about. But I'm glad that we had this discussion between consent management tool versus consent managers, because it is also very central to consent design. And thank you, Dipanjan, for providing those very concrete examples of consent managers that we see right now, such as the tri distributed ledgers of consent, or the account aggregators which are functioning in a way that is very similar to how consent managers are defined, and that requires a central repository that to facilitate that interoperability. And we are yet to see how that can be pulled off at a general level, or whether it will be done in an industry specific way. So thank you for that discussion. But when before we got into it, I had this one question that we are often asked, and this one question that I wanted to pose to Sneha and Dipanjan both, if Dipanjan wants to come in, is that a lot of business is done through these unorganized channels, right? And a lot of business is done where leads are created by third parties, by your agents, and then passed on to your employees via WhatsApp, right? Or via an Excel sheet and an email. And that immediately when that happens, like how do you evaluate the risk in that? Is that something that businesses would be okay with shutting down as a process, or if not, or making entirely digital as a process, or if not, then would we have to explore other ways to collect consents in this situation to make sure that these transfers are legitimized to reduce risk for the organization?
Yeah, I
So,
think that's yeah, I think that's a very common challenge, Pushkal, and it's a widespread challenge, right? Especially the use of WhatsApp these days, because in multiple organizations where we are having a conversation, there is so much of material that is shared both by the organization as well as received by the organization on WhatsApp. And this is not just general marketing material and things, but even if someone wants a report, just for convenience purpose, everyone like starts sharing leads and reports, etc., just on WhatsApp. So I think what is going to change, because when we are sort of designing these journeys or the workflows or realigning their business processes, right, what we typically look at is if at all there are any such informal channels like WhatsApp, etc., of just sharing things randomly. We are sort of, based on the business, recommending to them that, look at formal channels where they can send you the information on formal channels. If you think constantly connecting on email, etc., is a challenge, create common repositories which can be accessed by your third parties who are regularly communicating with you or with your customers, etc. Because going forward, the WhatsApp communication definitely is going to reduce, because one, it's not an official channel of communication, and secondly, lead generation specifically, unless going forward, if you unless you have specific explicit consent, both the people who are, or the agencies who are sharing the information, as well as the organization that's receiving it, need to restrict it, or at least be careful about it. Yeah, definitely it's a challenge as of today, Pushkal, but yeah, it's a challenge in India which is more widespread, but I've seen this challenge across Europe as well. I think with a lot of GDPR compliances, even some of the US privacy state laws, even in South Africa and others. Globally, I think it's a challenge, because just sharing information over social media or platforms like WhatsApp is very, very easy and convenient. But yeah, eventually they will be restricted and far more governed.
Got it. Yeah, I wonder if I wonder how business teams would respond to requiring such a central repository.
I
And
think
I
I think from the experience, Pushkal, I don't think anything is really going to stop 100%. Because I've seen it even when we've done extensive GDPR implementation and things. These things don't really stop. There will be ways around it to ensure that the compliance of it is maintained. So whether it is through a repository, like big organizations can probably look at repositories with big third parties and stuff, but like smaller areas will not really be able to operationalize it as much. Practically speaking, I don't think anything's going to stop, but we'll work around it to ensure that there is bare minimum, or at least the basic compliance maintained to DP. Because just stopping something, or any law or regulation, I don't think up till date has become a showstopper for a business as such. It won't be, because that's not the purpose also, right? It's not the purpose of any law or act to ensure that business is hampered or reduced in any way. So
Yeah, for sure. But at the same time, it is looking to protect consumer interest. So this is a nice sort of quandary to be in. Really open to any one of the panelists to come in and share their experiences on this specific point, but while we wait, I just want to give my 2 cents here that this is typical problem where technology can really help in, and this is actually what we mean by making the journeys frictionless, yet at the same time fully compliant. So it is very easy to set up like a WhatsApp message board where all the leads can be sent and programmatically consent requests can be sent out, which will achieve the goal of the central repository, but still keep things simple and straightforward for businesses.
So Pushkal, I
Something
have
like,
a view
yeah,
over here. I have a view over here.
yes,
Now, when it comes to WhatsApp and Telegram, these are end-to-end encrypted. Whatever goes there, it's very difficult to track even. So we need to ensure what goes over there. Is customer information, personal information going over there? Ideally, organization needs to do the classification of their information. So anything which is publicly available, I mean, that can go definitely, not a problem. But anything which is internal, which is sensitive, which is restricted, which is confidential, that information should not go into WhatsApp or any encrypted channel outside the organization. That should always remain within organizational network. Cannot go on any other device where you lose the visibility of the data. If I mean that is the case, there's a violation of the organization policy. There's a violation of the law. So I
that's true.
think these needs to be taken care. I mean, what is going? While you cannot stop everything, because convenience and the business also is required. But again, you should have a control over what goes on these channels.
And one of the
Yeah,
things, Pushkal, to adding to Dipanjan's point, which is a very valid point, one of the things that organizations have been using as a security safeguard is also, using MDM solution like mobile device management solutions if they are accessing
yeah,
any company information on personal devices. Like BYOD policies are there in every organization, right? That is the purpose of it. Like when you have MDM, it sort of containerizes your device and the organization has control over it to put restrictions of how that data can be used. So some of these controls, I think, yeah, will definitely help.
yeah, absolutely. Yeah, I think we have a really good selection of views on this now. So let's move on from this topic. So we've been talking about third parties. We're talking about third parties as agents so far, people who are sourcing leads and passing it to your retail lenders. But there are big fish as well, right? That are third parties who are sitting behind the retail lenders and funding their books, right? And taking the loans on their books. So, like huge banks and huge financial organizations are entering into co-lending sort of relationships where they are sharing books with for the loans. Now, in these situations, this is very interesting because while it is what we say a fiduciary to fiduciary relationship, to put it simply, both parties, both businesses are regulated entities and they are responsible for what they're doing with the data of the customer, and they are the owners of all the responsibilities associated with the data of the customer. But one of them is fronting the relationship and the other one is behind in that relationship. So, of course, one thing that can be done here, which we spoke about already, is that you can, in this case, you can definitely have watertight contracts, which apportion the responsibility for who will collect consent, who will provide data principal rights, and who will manage all of that. Because it's fair, it's safe to say that both of these parties in a co-lending relationship are trusted third parties. But when it comes to practicalities, for example, if there is a erasure request, who can it be raised to, and if it is raised to one, should it apply to the other, and if it applies to the other, then is it the responsibility of the initial co-lender to ensure that the data is erased with the second co-lender? So scenarios like this often arise. First, want to start off with a general point, that what are the challenges that you foresee coming up in these co-lending situations, or are there no challenges at all? Is this a solved problem? So, Sneha or Dipanjan, anyone would like to take that?
I, yeah. Okay. So I think no, the challenge is definitely there, Pushkal, because operationalizing any control, especially like an act or a regulatory a framework, definitely will always have its challenges. I think one of the major challenges will be while just declaring while during co-lending, just declaring who your fiduciaries are, etc., is less of a challenge. But I think once the data is collected, in terms of the retention of that data, erasure, like on the DPR, right, like the data principal rights that we need to give to the customers, how are those going to be operationalized at both entities? Like let's take an example of, let's say, a bank and an NBFC or any fintech partner that they have. How are they going to ensure that the communication trickles in? Because the moment there is a DPR raised, obviously, because both are data fiduciaries, the impact of, or from a customer perspective, I think both will be impacted, because they'll have to ensure that the DPR principles and the whole workflow is implemented at both parties. So yeah, definitely it's going to be a challenge, but I think what can be done to simplify this process instead of overcomplicating it is basically ensuring that the connected NBFC and the bank or the fintech partners are aligning internally their own processes that they have designed, because every organization has their own processes. I think it's just about aligning the processes to ensure that there are similarities and common channels of communication for customers that are going through their co-lending relationship, because that eventually will need to happen, because the right to erasure of data, the right to access of data for the data principles has to be given to them. It cannot be just the responsibility of one party here, is my opinion. But yeah,
Makes sense.
hear it from the organizations, or even Dipanjan, the likes of Dipanjan, who are actually facing this particular challenge.
Yeah, absolutely. Dipanjan, any of the panelists also, please
Yeah.
come in. Any of the attendees, yeah.
So, I mean, when it comes to uh, data flowing from third parties, specifically, you have fintech partners. Now, I mean, these things can get more complicated. I mean, you might have some payment gateways also involved in it. You can have an e-commerce platform also engaged in it. So there can be a multi-party transaction, very complex situation which might arise. And in every case, you find except one or two, three parties are fiduciaries over here, maybe two are processors. So these scenarios might, I mean, arise, and there's a good possibility of that. The very important, I mean, document, which I call the Bible of all data transaction, is the contract. So in the contract between these two parties, I mean, two or three, whatever parties are involved in these transactions, I mean, they need to clearly mention the obligations of the parties in relation to who collects consent, or all the parties are required to collect consent. Who is facing the customer? If the party is facing the customer is a fintech, they need to give a clear notice and consent. And if through this fintech they are coming to our the NBFC or the bank's platform, in that case the bank has to display their privacy notices. And when it comes to privacy right application, so in that case it should be clearly called out in the contract that the parties will have to integrate in terms of data principal access requests. If there is a request for erasure, now if the erasure comes to the fintech company, the fintech company has to follow their protocols because they are also abiding by the DPDP as well as they have got RBI. Even the NBFC or the bank are also required to, I mean, follow the RBI instructions. So in that case, they need to clearly call out in the contract that how this will be dealt. They need to set up clear procedures. So when you do this third-party due diligence, you need to ensure that these protocols are already present within this fintech companies, because banks are already in a regulated, banks or NBFCs are already in a highly regulated environment, and there's a lot of numerous assessments audits done by RBI time to time. They get a lot of feedbacks also. So they are already in a regulated sector, and there's certain structures which are already present. But when it comes to the new age fintech companies, they are evolving,
Hmm.
and while they are trying to catch up with the regulations what RBI is actually laid down, but there's a lot of gaps at present. So now addition to this list is the DPDP Act. As a, I mean, regulated entity, the banks or NBFCs should implement strong contracts with these fintechs to ensure that they are also developing their own privacy environment. Their privacy and security postures are very strong, and they are capable of managing these type of risks. And then only, I mean, you can have a fair transaction. I mean, that was my 2 cents on this. But things are going to get more complicated when there are multi parties involved in it. And I mean, the contract should be super tight to ensure that there are no lapses, and no one should say this is not my responsibility, the other party's responsibility. That will bring a lot of issues, lot of disputes going forward.
Absolutely. That's, yeah, quite to the point. I think the contracts need to be watertight. Just coming in with a technical sort of point of view, I think these setups would definitely also benefit from a common system of record where all the parties in a relationship can look at stuff like what needs to be erased and verification for whether that has been erased, so that a common sort of front can be a common message can be given to the data principal about, let's say, an erasure verification or about serving an access request or something like that. So that is where I think a technology platform can also come in and help. Lots to speak about in the channels itself. We can also cover, physical sort of journeys. But one thing, even though we have just 10 minutes in this session, one thing that I do want to talk about is one-time notices, right? So one-time notices pose a unique problem, because you have to send it to all of your previous customers, right? And now when it comes to your previous customers, we have had this experience in re-KYC also, that it's difficult. So how do you fulfill this obligation of sending a one-time notice? What are the strategies that you are thinking about? So maybe Dipanjan, if you would want to come in here.
See, when it comes to, the customer's data which you already hold, at least in a banking setup, there is some amount of consent already there. But that is not sufficient because there are a lot of questions how the consent was obtained, whether there was a choice given to the customers. These are certain questions definitely will arise. Apart from that, notices. Have the customers been informed about the nature of processing that will happen? How the customers will withdraw their consent? These are certain questions which are always there. Best part is to first of all you have your privacy notices updated, and the law requires certain efforts to be done. Today, if you ask companies to ensure that all legacy customers are to be complied under consent management, every company will struggle because there's a huge volume data already sitting within the organization, and this has to be done phase wise. Any new customers coming in has to come through the DPDP compliance route. Existing customers, there should be a reasonable effort from every organization to ensure that the notices are delivered to them. Now, if, for example, if you have their contact details, correct contact details, you can reach out to them, sending those updates. Hey, we have updated our privacy notice. We hold your data. Would you uh, like us to continue holding this data? So these are certain pointers you can definitely send to customers. For whom you don't have the data, or their data might have changed, for example mobile number, email address might have changed, so you can use multiple points. So for example, you can have those privacy notices displayed on your branches. If you are a bank, you can also use your applications, mobile applications, if the customer is using a mobile application. So mobile applications can have an update in terms of the change in privacy notice or privacy policy. So these can be done. And there can be certain communication in terms of when you send an SMS relating to loan communications, EMI dues. Also, you send statements, so you can include your updated privacy notices over there. And also, if there is a, data refresh happening, so you are offering a new product to the customer, to an existing customer, so at that point of time you can get the correct details over there, and definitely you can get the consent, you can give the updated privacy notice also. So there are a lot of areas which you can work upon to get this notices, but it cannot be done in one day. It will be done over a period of time. So that pain has to be taken, and over a period of time, every customer who will be in our ecosystem, or banks or financial institutions ecosystem, will provide consent, and the organization will comply with DP Act, but it will be in a phase wise manner. Any new acquisition of customers will come through the DP compliance route. Existing customers, gradually it has to move.
Yeah, yeah. And so lots of very useful strategies there. Thank you so much for that, Dipanjan. And I often say that while this is a new problem for in the privacy space, this problem has been solved in collections. Collection agencies and collections teams can find you wherever you are, and they can send you a notice. So I think there is a lot that financial organizations can learn, from practices in collections to send across these notices through letters or various approaches, which are, of course, they need to be cost effective, but lots of lessons there. We have technically 4 minutes in this session, and I just want to touch upon the second stage that Dipanjan had set up in this discussion, which is about, the scope of the consent and whether some purposes are mandatory and some purposes are optional, such as upselling, cross-selling, and business analytics. And how do they align with business processes, and how should the business make sure that they are able to, get the right consent from the right person to be able to sell them the right thing. So there, Sneha, how are you solutioning this with other financial organizations?
So I think some of the things that we are doing, Pushkal, and we are recommending is one, obviously there will be no option but for us to give or design the consent template to have multiple options, right? One is obviously, and you can see it even now on some of the websites where there are two options. One is obviously a mandatory one where it says you have to agree the terms and conditions, which someone has to check, and the other is for marketing material. And some of them also have like three options where would you like us to communicate on WhatsApp, etc., etc. So the way we are proposing and designing the consent templates as of now for financial institutes is we are calling we are at the first stage. Obviously we are identifying the all of the purposes that they as an organization have, and then based on that we are putting those purposes into those consents, where there are two or three different checkboxes that the customer has to click. The same consent template can be digitized, which means it can go on their websites or their other portals where products are being bought by the customers, or websites where people are just browsing and they still have to choose those options. And the same can be used in a printed form as well for anyone who walks into a branch or any other channels where physical like customers are dealt with physically, like face to face. So I think those multiple options will need to be given to customers. However, when we are designing, we are very conscious of ensuring they're simple, and we are not making it too technical for customers not to understand, or sort of we are not unlike before how everything used to be clubbed. We are not really making it difficult for them to understand that they'll not spend time thinking. They'll just take everything and go ahead. I think it has to be simple, clearly defined, based on the purposes of the organization, and it has to be very simple. Most importantly, it cannot be complicated. You cannot give them 10 options, to keep checking. That's not how it should be done.
Yeah, yeah. I wonder where the standard will be set, right? Like, legally speaking,
Yeah.
are you saying that I'm going to give you new offers, and that is a purpose for consent, and that's it, and then you can give them all the new offers, but or is it that I'm going to give you new offers? Go ahead and select which offers you'd like. Would you like credit card offers, personal loan offers? That selection, and then against that consideration, I wonder whether it would become, as you said, very overwhelming for the customer to have the second option. And then how do you balance that?
Yeah, I think the way it needs to be designed is obviously one which is mandatory consent. Second is, when you're designing for any kind of cross selling or marketing material, that whole option that is given to the customer, we have to clearly state over there that are you okay for, let's say HDFC as an example, right? Let's say, are you okay for HDFC to send you material on our new products, etc., etc., and are you okay for us to inform you about any third parties, any new products with other third parties or other co-lenders, etc. So I think it depends on the purpose. Like I said, the first step is to understand the business and the purpose, because for every organization it's going to be different. But more or less, Pushkal, I think as a business, right, we need to ensure that at least these two or three different explicitly called out options are given to the customer. They cannot be clubbed, because you cannot club marketing consent and you cannot club it with like product selling or cross selling consent. So I think two or three different topics which will by default come. Everything else will be optional in terms of how we are designing it, what's the language, etc.
Yeah, but while we are doing that, I think business and marketing teams will compel, it will become a UI problem at the end of the day, that how do you present this across all the channels that we discussed, right? Agency, physical,
Yeah,
digital,
yeah.
WhatsApp. How
Yeah,
do you
that's why I
present
said,
this to the
the
users?
statements, the way they're written, right? It has to be very like concise and simple. They cannot be like two, three sentences, which people will have to read. Because we also have to be conscious that, especially in a country like India, there are going to be a lot of people who will not understand. We have to ensure, who are the audience that we are targeting. Based on that, do we need to design the same conceptual consent in multiple ways? Like, do we have to make it more visual, etc.? It all depends on how the organization wants to implement it. But at the face of it, I think just giving them those options very clearly and concisely is important, and in the language that they will understand.
Perfect. Yeah. I'll take a second, 10 seconds of pause here if anybody else wants to come in on this point. We still have our audience and we still have our panelists. So while we have them, I'm also thinking of floating one last question for this discussion, going back to channels that a lot in retail lending, MFI space, or uh, in lots of like remote spaces, you are often dealing with people who are not educated or who do not even understand what a consent means, who may not be able to read your consent notices, who may not be able to provide, who may not be able to interact with your consent notices. So, how do you what are the strategies or solutions for these cases? Because we are at a place where about 70 or roughly 70% people are educated, and a lot of them are not. A lot of them live in remote places, and a lot of them, have like half of them have some sort of internet or digital access, but the other half does not. So, how do you solve for the other half of the country or the other quarter of the country that is interacting with these financial services, these financial products, but they don't really know how to interact with consents per se?
Yeah. I think, and of course, there is no right or wrong answer to this as of now, but I think some of the strategies that I have also seen, which are working for some of, the standards that India has. Like for example, let's take farmer population, right, where they need to have a bank account, and a lot of them, most of them also have bank accounts, or they have footprints in financial NBFCs, or financial organizations. That is where the way the government has sort of brought them in, or sort of created awareness and ensured they understand some of these, like kisan yojana policies and things like that. The way they are made to understand is not by just giving them a pamphlet and telling them follow the instructions, but also making it very visually understandable for them. No matter how much you simplify a consent language, ultimately it might still sound like a jargon for somebody who is not educated, or they might not even be able to relate to what do you say when you say that accept my terms and conditions. They'll not understand that. So essentially it has to be designed in a way where they are visually understanding what they are agreeing to and what they are giving the consent for. So I think it requires a little bit of creativity, for the, but I think our government has set some really good examples when they have released some of these yojanas, or these our citizens, where they have they are not educated, or they are in very very remote rural areas. Yeah, I think it's about how you want to present it, as long as you're sort of complying with the legal and the DPDP laws. Doing
Fair,
with
fair, yeah.
IVR, like we see on the screen, right? IVR, yes, is an example, definitely, because IVR can be in the language that the customer understands in different regions. But yeah, IVR is not as easy for someone who is like probably a senior citizen, or not an educated person, for them to understand. So yeah, I think it's cool.
Absolutely.
Yeah.
Absolutely. Yeah. I think the visual cues, assisted flows,
Yeah.
providing that guidance, that is a great way to do this. Maybe having some sort of an audio interaction or a visual interaction is critical here. And another UI challenge for us to solve, the way I see it. But I think this is a good time to summarize this session and end it with a word of thanks. So I'm very happy with what we managed to cover today. We came in with Dipanjan setting the stage for the discussion, talking about the scope of consents and how consents are critical for business processes, and how those business operations, like this, the doing business, is now inherently tied to collecting consent. And he also spoke about the various channels from which consents are collected. And then we all went on and discussed, the various approaches with third parties, the different types of third parties. Thanks to Satish, we also discussed consent management tools versus consent managers. We also spoke about, upselling scenarios and what is the right amount of choice to give to the customer. And we touched upon the various UI UX challenges, basically, how do you go about collecting these consents? And I think there's another request for to discuss withdrawal of consent also. So, Divya, is there anything specific that you want to ask about consent withdrawal?
And I think it would be helpful for us to understand how will what are the options for withdrawal as well, because I believe the options which you provided, it requires another round of consideration from the perspective of withdrawal of consent also. So just wanted to have your opinion or views on it.
So the legal requirement there is to have withdrawal, give a withdrawal option, an option to withdraw consent to your end users. Of course. So, Sneha, what sort of considerations would go into when you allow consent withdrawal, when you don't allow consent withdrawal? Would you like to talk about that?
Yeah, sure. So I think it's pretty, I mean, yeah, not as straightforward, but yeah, I think consent withdrawal for any mandatory purposes, right? Like for example, if I have a bank account, yeah, if the bank continuously does like they do KYC very frequently, like maybe once in a year or once in 2 years, 3 years, whatever. Now, if I have to withdraw my consent for the bank to do a regular KYC for my profile, or any sort of mandatory checks on my profile, that would mean that the bank can no longer service my product, because it's a mandatory requirement for the bank. However, if it's anything to do with marketing material, if I feel I'm getting too many marketing materials, or if I feel I'm getting, while initially I may have given the consent, but now I want to withdraw the consent for anything that is non-mandatory services or optional consents, like I might have given my consent for you to communicate with me on WhatsApp, but now I no longer feel that you should be communicating on WhatsApp. I can withdraw that consent. So I think the option needs to be given to the customer for all the optional consent. Mandatory consent may, there will be no opportunity for us to give them that option to withdraw unless they choose not to be our customer anymore. Because if they withdraw a mandatory consent, then I don't think we can service them anymore. Yeah,
Yeah, yeah,
this
makes
is
sense. And there are
primarily,
often,
yeah.
please finish.
No, I was just saying this is primarily only going to be applicable for optional consents as opposed to the mandatory consents.
Sure. Yeah, and please, anyone else also feel free to come in there. And while we wait, another thing to think about here is the various channels from which consent can be withdrawn. So there is the obvious website and application, but some people would want to walk up to the branch and withdraw their consent. Some people would want to maybe withdraw their consent on a call with a call center agent. So those are all avenues where if consent is being collected, well, technically you're required to provide consent withdrawal also, because the law requires that withdrawal should be as easy as it is to collect consent. You another thought has to be put into how you're going to do consent withdrawal across all of these channels, where you have done consent collection, be it physical or digital, assisted, phone, branch, and yeah, so that and to create verifiable records of those withdrawals and to propagate that within your digital ecosystem, which gets very tricky with physical. We didn't discuss physical today, but it's very tricky to do governance with physical consent collection and withdrawal. But yeah, those are the sort of things to think about there. Uh, any other any other topics to cover? Great. So we discussed withdrawal also. That's perfect. And I think while we are at while we are at physical, let's finish that off also. So the problem is that digital, you have to regulate digital data, but consents, but a lot of onboarding is done physically. How are you approaching these problems right now, Sneha?
So as of now, essentially, wherever all of the forms, like physical forms, are filled up, or anything that comes in physical form, right? So as we know, obviously, because DPDP is applicable to the data that is digital. Now, all of these forms, the data that is collected, eventually gets entered into these systems or the CRMs or whatever the application that the banks or the NBFCs use. So essentially, what happens is there are two ways. One is for them to ensure that there are appropriate controls around how they are storing that information, the physical forms that are collected, because those physical forms eventually are stored in a particular area. So they need to ensure security, physical security controls around storing it. If they feel that once that information is digitized, and if there is no other obligation in terms of maintaining those forms, because there are physical signatures on that form, etc., whatever might be as per RBI regulations or any other regulation that applies to the bank, if they have no need to maintain that particular physical document that they have collected, they should shred it, or sort of securely dispose it. But in most cases, the secure disposal of the shredding is not an option initially, because they need to retain it or maintain it for a certain period of time. So just of all the controls around storing all of that information, which is happening even now. So I think if there is a process or a workflow around it, in fact the storage costs will only reduce if it is properly designed, because as of now everything is just stored as is. So yeah, I think.
Yeah, I'd like to offer a contrarian view over there. At legality, we have declared a war on paper for the past decade now. We've helped huge banks digitize their onboarding journeys fully, and now with consent collection, we don't think it's a good idea. Of course, there can be exceptional cases, but in general, it's not a good idea to collect consents on paper because there are high error rates, there are storage costs, you have to maintain proof of consent, and you have to make that available. No, I know that you're saying that storage is happening anyway, but those costs are anyway high, and
Yeah.
these proofs of consent have to now be interoperable also, which doesn't apply to loan agreements, because we discuss all the third party scenarios. And when you're going to digitize it, how you're going to digitize it? Is there someone going to be sitting there doing the manual work? If it is manual work, then how is it a immutable record? If it is a scan, then your storage costs go up, like in terms of digital storage costs. So there are lots of problems with it, and definitely the bulk of the effort should be to digitize it at source. It is a biased view, but I think it is a defensible view. I think it is a valid view to just avoid paper altogether. And of course, from legality, we are bound to say. Just wanted to
If it
offer
can
that
be done, definitely, but I see it as a far off journey where we'll be completely 100% paperless. But yeah, definitely, I agree. With the last few years, at least the last 10 years, I can see a reduction in the amount of physical paper that is used even in banks and BFCs wherever you go. So yeah, good. Yeah, that's obviously an option, but yeah.
Yeah, cool. Great. We covered physical also. I think we've really covered all the things that I wanted to. And it seems like we've covered all the things that the panelists wanted to also, because we haven't gotten any more questions. Thank you so much, Dipanjan and Sneha, for taking out the time and the additional 15 minutes, more than what we had provisioned. And it was really, really insightful to have this discussion. I'm sure the attendees would benefit from this, and definitely when we make it public, the broader community 100% is going to benefit from such a practical and such a simple discussion on such a complex and nuanced topic. Thank you so much for the attendees also, especially for contributing, Satish, Divya, and all those others who helped shape this discussion. We intend to do a lot more of these within the community. So thank you so much for being here, and thank you so much for contributing as well. Yeah, and especially, of course, saying it again, Dipanjan and Sneha, it was an absolute pleasure. Thank you so much for.
Likewise, Pushkal,
Thanks.
thank you for arranging this, because it's always good for us to hear, what real challenges organizations are facing as well. So that helps us to get better in, sort of designing our solutions, because eventually we don't want to get theoretical about it, right? We want to ensure it practically works for organizations. So yeah, thank you for arranging it. It's always a good discussion with you guys.
Thanks, Pushkal and legality team. Thank you very much.